None of VPM Partners, Bob Kendall, or any of its officers, directors, employees, other personnel, representatives, agents, or independent contractors is, in such capacities, a licensed financial advisor, a registered investment advisor, or a registered broker-dealer. None of VPM Partners or its personnel gives investment or financial advice or makes investment recommendations, nor are any of them in the business of effecting trades or directing client equity accounts or giving futures trading advice tailored to any particular client situation. Nothing contained in VPM Partners broadcasts, on its websites, or in its written materials constitutes a solicitation, recommendation, promotion, endorsement, or offer by others described above of any particular security, other investment product, transaction, or investment. Copyright 2014 VPM Partners. All rights reserved. Terms of use apply. Reproduction, adaptation, distribution, public display, exhibition for profit, or storage in any electronic storage media in whole or in part is prohibited under penalty of law.
Everything.
I'll give.
Testing. Okay. Sorry for the delay. We had a little issue with the sound. It's a brand new studio. We just got it literally finished last night. So a couple little glitches here. Apologize. Anyway, we're having quite the week again. Having visions of 2011 again. It's getting a little crazy out there where we're seeing these massive 20 and 30 point reversals back to back each day. I talked about in commentary the other day that I thought where we'd be locked in this trading range. Well, they took out that range yesterday. I was actually traveling. Mitch was texting me that the market was getting hit. I was going through security. I got on the other side of security and looked at everything and started tweeting some of the things that I thought were going to happen. I thought we'd see somewhere between 1827 to around 1824. We actually spiked below that to 1819, and we're seeing a lot of the stuff here from the standpoint of okay. Yeah, so we'll go ahead to live chart. Sorry, we're having some issues with the video, but it's all good. What? Yeah. So anyway, I was tweeting about the 1827, 1824 number. We went to 19 this morning, and the patterns that are evolving here are becoming more and more negative. The 1834 number was pretty significant from the standpoint that was last month's low. So we've made a new historical high this month. It's still early in April, but new historical high, and now we're seeing a new low from last month. So this is beginnings. I mentioned this in commentary for this morning. That's the beginnings of an outside reversal bar, and this is beginning to be significant. We've got 20 some days left in this month, so anything can happen, but certainly there's a lot of pressure here early in the month. There's a couple things we'll go ahead and take a look at the charts here. You can see the chart that I have on the screen right now is the classic futures contract, where we're seeing the market just kind of going sideways. This is a 1 minute graph right now. But let's take a look. Let's go ahead and do some quick reviews of some of the things that happened over the last few days, and start to look at the S&P from the standpoint of a bigger index view. So there's a couple things I'm going to adjust here just so I can get this done. Some of the things that I think are happening here are starting to show, as I mentioned, that we could see some pretty drastic changes in the market from a trending standpoint. So looking at the S&P 500 that I have up here, this is the cash market. You can see the last couple days, the last two sessions, we've sold off down to this level. The interesting thing that, from my viewpoint, what's happening is we're starting, it looks like a reversal, because we were down some pretty good numbers this morning, and now we're only down 152. We're at 1831, and we're about 12 handles off the lows right now. And you can see on this, see if I can blow this up just a little bit so you can get just this most recent action. You can see the bars that are unfolding. You're getting the beginnings of a possible reversal bar. So if the market turns positive, we could start to see it trade into maybe the R1, R2 numbers on the daily numbers, and that would be around 1839 to 1846. It could be a pretty decent turnaround. In the commentary, I thought that we would see a possibility of a reversal today, or at least an upward move. It's typical after this type of range, so we may end up finishing the week right back into this trading range as it's unfolding. So we'll go ahead and zoom back out. Interesting from a momentum standpoint, the PPM's down below. You've got, on a short-term basis, you've got the PPM1 flat, but the PPM2 is turning up in spite of the sharp drop yesterday. It is actually still showing some pretty decent momentum and a slight shift in momentum. Now the PPM3 that's at the bottom over here, that is beginning to be more of a substance kind of view from it's showing some weakness, so it's starting to turn down. So that's going to end up, that level there is going to end up to be the resistance on the chart. So let's see here, that number is going to be the 1858.30 level is going to be a pretty good resistance should we rebound. So we're not getting out of this pattern anytime soon. Critical level on the downside. We'll go to the intermediate now and take a look at that. Go to intermediate view, and this is going to show us that we're trading at some pretty good support. I'm going to zoom in here so we can get an idea of how that works. As we zoom in, we can see we're trading right at the 21-week moving average. That number right now is 1828. So we're sitting here trading exactly 1828.37 right now, and we're trading on some minor support. I've talked to couple times about some of the patterns, and I realized when we set up this new studio just now that I don't have a whiteboard on this computer to draw out some things, so I'm going to have to use a cursor and discuss them for today's session. But the element that we need to, I guess, pay attention to is how we close around this 21 period moving average. It's starting to lose some momentum. It's actually positive yet, so there's some slight upside on this, but it's not really very robust, and that's typical within these sideways patterns. And while we've expanded the pattern on the downside from the 1840 level, trading all the way down to 18, let's see, the low is 1967 today. It was more or less a spike. The market rebounded very quickly from there. And one of the things when I see these type of spikes like what we see today, where the market goes down extreme early in the session and there's buyers showing up, and then all of a sudden we're trading back up around on change. We're starting to fade just a little bit, but but that type of action tells you that the markets aren't collapsing. Of course, same problems that we've seen last week and continue. Biotech's leading the way down. Some of the financials are having issues, and other tech stocks are having issues. So news media is actually focusing in on some of the other things from the standpoint of from the standpoint of those, that's what's driving the market. And I think what's really happening, even with you look at some of the IPOs that have been coming out lately, there seems to be a lot of pressure to be able to come on and keep, I guess, there's a lot of sellers out there. Nobody's really interested in the market at this time. So I'm going to zoom back out here. Let's go ahead and just take a quick snapshot of the monthly chart. And now we're looking at long-term trends here. And while the trend is still up, as I mentioned earlier, the pattern that's unfolding is potentially an outside reversal bar. So I'm going to zoom in on that just so you can see what I'm talking about here. Do my best to show you exactly what's happening. I've got a cursor on the last month's bar, the low 1834.44. The low this month now was today's low, which was 1819.67, and the high was 1897.28. So we got just close to the patterns that are unfolding on a larger scale. And what we're seeing here is just a continuation of the sideways range. When you start to look at it and you zoom back out here, you can see here that this is just part of the larger pattern that's consolidating at these highs. Whether this becomes a major top or not is still hard to tell. Momentum is still very positive on a longer term basis, so there's really not a way to make a call here and say this thing is over, because it's probably not. While there could be some further downside, that is one of the key elements that we're looking at there. So from the standpoint of the overall longer term trend, which is the monthly chart we're looking at right now, there are signs that the market's going to be under pressure. I'm opening up the 10-month moving average right now is 1775.42. So we could run all the way down into 1780s or so and still not break the longer term trends. On a short term basis, we've already signaled a high in the marketplace. On an intermediate term basis, we've also signaled at least a sideways pattern, but that happened last week when we saw the collapse. And now we're just trading in this range with a bias to the downside on the short and intermediate term. Longer term trends still very positive. So what does this mean from a standpoint of looking at VPM? And from a VPM standpoint, what we're likely to see out of the models is probably mostly stability, because there's a lot of intermediate trends that are not breaking down. They're most likely going to be able to continue to evolve from just like the indexes are. And there's still stocks out there that are doing well in spite of some of the downside. A lot of these momentum stocks we've already sold out of, and we're not really participating in a lot of stocks. And those are things that from that viewpoint, we're in pretty good position. If you look at your stock portfolios, you're probably mostly invested fairly heavily. The indexing is still also very invested, and the realities are we're moving in about 2.5% ranges right now, and there's really no trends. As I mentioned, short term, intermediate, flat to down slightly. Long term is still up. So let's go ahead and go back to some charts and take a look at some of the elements that we can see. Let's go over and take a look at, we talked about the Dow last week, and I promised you the other day that we would go over gold, and we will do that today. We'll get over gold, and there's some other things we'll go through on for the stock of the day. We're actually going to go through and look at Apple. We went through our database, and we saw that one of the top holdings, or the number one stock holdings, at least in a portfolio, is Apple. Yet it's very, very highly followed by you folks, and then we're gonna talk about some of those things. We're gonna focus probably in the next couple meetings around the top 10 holdings, or at least top 10 holdings from the standpoint of active list and what's going on. So ultimately, we'll go ahead and we'll go through some things on VPM as well. So here we have this is actually the Treasury bond. So let me fix that. This is the Dow index, and the Dow index is a couple things are happening here that I think are significant from the standpoint of the trend. Even though we've dropped down, we're back down to the lower end of the range here. You can see my crosshairs here. Lower end of the range is there. We saw right here. You can see a couple little dots here on the screen below the bar of yesterday. This is a daily, so there's a slight cycle low due, and it looks like it's acting a little better. It's stable. If we go over and look at the intermediate charts or the weekly, this will do pretty much in inverse of what the market's been doing. You can see that we've been in a consolidation range just right across this level over here. And you can see that the pattern that's unfolding is pretty much it's slightly down at this time, even on the intermediate level, and the pressure is there, but I don't think it's going to be able to break through these lows. I think we'll continue to see some stability from that standpoint. So let's go ahead and let's look at gold. That's also a lot of you folks have gold in your portfolios, at least watching, even though. So the gold chart is similar in that I'm going to bring this down a little bit just so we can see this pattern that's unfolding a little bit, and I'm actually going to go ahead and just take a couple of these techniques off here for a moment. I'm going to take off some of the calculations so we see the chart just a little better. There we go. That's much better. And we'll zoom back out for a second. But now you can see the pattern that's unfolding. If you recall, some of the things I've been talking about since we started the Market Thunder broadcast, these moving averages, when they're spread out, right here you see, I can see my cursor isn't matching up well. I'm sorry I don't have my whiteboard on this. That was a mistake on my part. But when the averages are expanded and then they converge, that's the sign that a market bottom is happening. So as in the annual report that I did, we're looking for gold still to move back above $1,400, maybe 1430s. This pattern that's unfolding is consistent with that view. we're seeing a bottoming pattern, and possibly, maybe the Dow does break lower and we start to see the gold start to pick up here. But the bottom line is this pattern is pretty bullish. We've seen a bottoming pattern from this going back for most of this year, actually. You've seen the market move up. We step back a little bit. The high that we made right here, once we get above the 1370, 72, 75 area, then you should start to see the market move up. And there's some other possibilities for this market to move as high as into the low 1500s. I don't think it does much more than that, but that's a decent return on money. There's a 15%, maybe 20% return on that, if that. So let's take a look at some of the longer term. This is the weekly intermediate. So let's go and look at the longer term gold chart. And this actually is probably the most revealing chart that is out there. We are currently trading above the 10 period moving average, and you can see right here where my cursor is, right above there. The pattern that's unfolding there is similar to what's happened on a weekly. And if you look at the PPMs below, you see the PPM 1 has just exploded up. It's actually turning up right now, which tells me that the 10-month moving average is actually turning positive. So the restraints on this market is going to be, you'll see 1452 off to the side there and 1535. That is the target range for this market to rebound back into. So in the annual report, this is what I was saying. This pattern should evolve into these moving averages. They probably, once it gets into that range at 1452, 1535 level, you're likely to see some retracement from there. And whether there's a longer term bull in this thing, it's way too early to make that call. We could see gold locked in a range, literally from 1320 to maybe the 1535, maybe a little higher up to 1600s. But as far as it going into some astronomical move up to 2000, that's not very likely at this time anyway. That'll cover gold. Let's take a look at a couple other things that are out there right now, and since we're on gold, why don't we do silver as well while we're here? We go back to the daily. Let's go to intermediate silver chart, and you can see same type of pattern. I believe what I have on here. Let me look at the. I believe I've got, this is VPM 1.2 model that's on silver here right now. And this is actually it's the futures on silver, not the ETF. So you can see we had a buy in this range. We just recently sold it, but it's the same basic pattern, this long consolidation pattern, and it's likely it should move higher as well. And I didn't do the price targets on this, so I don't have those available, but I would suspect the same type of situation where you see maybe a 15-20% move, maybe back up to 25, maybe 27, which would be a little more than that, be close to 30. So there's probably an opportunity that's coming up in silver. If you have that in your portfolios, it'll probably come into play at some stage, and this next trade should be a pretty good trade. Typically, if you look at how VPM trades things, and especially in these long consolidation periods like this, you'll get a trade like this where it buys and then it sells, or it starts to break down, it loses momentum, it bails out of that trade. That next trade is a really good one. And in the future meetings, we're going to start, hopefully in the next week or so, we're going to start another session that we're going to do that's going to be talking strictly about how VPM works, the trading models, all the aspects of that, starting, and I'm not sure what we're going to call that show, like portfolios and more, but just basically understanding everything from the signals that are coming on to everything else that's in the pattern. So continuing on, Oh, let's do one more thing before I move on. Let's go ahead and take a look at the monthly chart. And you'll see the same type of situation that I was talking about in the gold. We're above the 10-month moving average, and we're going to move back in. Here currently the 21-month moving average is 25.07.01, and then the 40-month moving average is 29. So we're going to move up at least to the 25, maybe the 29. And remember, folks, this is a monthly chart. So each one of these bars is 1 month. You're looking at, 12, 14 months of action to get up. Probably to get up to 25, it's probably anywhere from 4 to 6 months. To complete this pattern, it might be as much as 12, 14 months. So this is going to be a longer term trend. We start to look at, you've got this price chart that we have here goes back to 1995. So we're looking at basically a 20-year chart. And this movements don't happen overnight. They take months to develop. And when we go back to the intermediate chart here, you can see some of the more finite moves that happen that end up forming. So this is every 4 weeks, obviously make the month. And so there's a lot more bars, and it gives a little better increment. And, many years ago, I learned that looking at monthly charts was probably, monthly charts and then going down to intermediate was the best way to determine what the trend was likely to do. So you look for a correlation between the long term and I like to go, I call it top down, long term, look at intermediate term, and then if there's more analysis, what I do on the S&P and some of the markets I watch a little closer, I'm actually going in and looking at it from a top down basis of monthly, weekly, and then daily. And then if it's a market like an S&P, I'll go down, even down to the hourly charts for a day-to-day when I'm doing day-to-day commentary and looking at all different levels of cycles and what have you. So let's go ahead and take a real quick snapshot back in the market. We've declined from where we were before. You can see we're back down 617 now on the day. So we got back to about unchanged. We couldn't break through it. There's a lot of pressure in this market. Not sure anybody's wanting to be real short down here, but no one's looking to buy this thing either. So this is a pretty significant move on this. So let's go ahead and we're going to look at a couple things that are happening from the standpoint of some of these longer term charts. And I think it's this is some cycles that we have here on an intraday basis right now. This is, once again, 5-minute futures. You can see these cycles that are going on. We're not due for probably another hour or so for the next low cycle to come in. And let's go over and look at the hourly graph. So this is some of the things that I look at to help to determine some of the movements that we have on an intraday basis and trying to figure out where they match up with some of the key numbers that are on the chart. So you can see that we've got a bit of a consolidation going on the hourly graph right here. You can see right next to my cursor, and that pattern is setting up, suggests that there's still some upside in this market, even though we've retraced this hour a little bit. Each one of these bars, and this is, when doing technical analysis, I'm pretty much a bar counter as well as looking at the relationships, how bars overlap. So each day a bar will overlap, and each hour, whatever the increment is, you're always going to have, for the most part, you're not going to have gaps in charts. They happen. Gaps are important when they do happen, but it's really about understanding how they overlap, and that's why on the daily commentary I'm always talking about the ranges, how they're likely to overlap, and that's why you can pretty accurately, especially after doing this for 30 years, you can pretty accurately start to call where the ranges are going to be every day. And that's why the ranges have been much better. They're good because of that, the art form and the understanding of how these things work each time. The cycles on the hourly, we've got a cycle that just can't, it's about to come in the next hour. Since the market's moved out, it could be a little hourly high. Just depends on the bar after this, whether we're going to get more recovery. Like I said, I suspect that we're going to finish down. One of the numbers on the market that I talked about today was 1826. This is the futures. So if we go over to back to the index, let me get gold off of here. Go back to the index here. You're going to see we're currently 1827.31. So close today under the 1826.85 is going to give us some carryover for next week. So next we're going to go ahead and dig into the stock of the day, and depending on how time goes, we may be able to carry over to several of these of these stocks that are out there, and we'll be able to talk about some things. As before, if you have any questions about what we're doing, you can use our Twitter account. You can send us an email to support, and Mitch and the guys will let me know if there's any questions you have that you want me to answer. So we'll go ahead and let's go ahead back to the charts, and let's take a look at Apple. So as we look at Apple here, we can see that it had a similar pattern. I wish my whiteboard was working. I apologize, but I'm going to try to get my cursor here so you can see this bottoming pattern that occurred where my cursor is right now. You'll see the same pattern that we're seeing in gold and silver. These patterns are always rolling. They're very, very consistent in how they act, and this is the basis of my analysis of, I hate to admit, but 35 years now, is understanding how the markets act around these moving averages, how the patterns work. This is really the deep understanding of how a trend works. So we see that the market has come into that same point where the moving averages spread out on the way down. Now they come out and converge. And if I just move over just a bit over here, you'll see that the convergence point was right where the cursor is right now. And then you start to see the market move up. But you'll notice that where you see a purchase, that's where VPM purchased this originally. And we can look at that purchase amount there. That was at 451. And then we saw an exit here at 502. So made about $50, a little bit more than 10% on that trade. It's flat right now, and as you look at these PPMs here, you'll see that they are starting to turn back up again, and all three of these, which are part of the way that VPM is going to determine what the next move is, are even rising or not declining very much. So for instance, we're down only 0.03 on PPM2, which is driven by the 21-week moving average. So this tells me there's no downtrend. The average is basically flat. There's no indication of really any directional movement from that standpoint. But when we look at the 10-week moving average, now we see it's up by 0.40. And that's a pretty positive number. So we're waiting for the market to consolidate a little bit more, and there'll probably be a re-entry on this particular trade. And just remembering, as let's say, I don't know if Apple will get up above 700 again. We'll see if this next trade starts to roll out. There's not a lot, I guess, going on. Maybe they'll finally collapse and do what Carl Icahn wants to do and pay out some money or something, and maybe there'll be some positive action here. I don't know what will cause this action to happen, but overall there's still an upsloping trend. The moving averages are not robust by any means. There's no trend right now, or VPM would own it. It's out of it because the previous trend from 451 to the 520s or so are completed itself. So this trade is not on right now for a reason, and it's waiting for a reason. And even if the market were to break down a little bit below these averages, as long as it probably didn't get much below 450 or so, it wouldn't be too bad on how to handle that. Let me zoom out here just a little bit so we can, and I am going to put up here, I'm going to put some lines. You won't be able to read these. I will read the values for you, but when I put some, I'm going to go and just look at this trend that from the low down here, and I want to look at some of these values, and you'll see from, you should be able to see these lines. You won't be able to read the actual, I guess maybe you could read them if you're on a large screen, but you're looking at that the market has moved up into pretty much where it was. It was actually a 0.76. I did this backwards. Let me just get rid of that. Let's redo that. This will be a lot easier if I go the right direction, I guess. So if we go from this top and to the bottom here, once again, you're going to see we just went above this. This was a 0.76, which is a Fibonacci ratio. Went right into that 528 number, which is where the number lies. And now we're probably going to stay anywhere like 459, 461 area would be an extreme and a downside. And based on the moving average configuration here, it's probably not likely to go much lower, maybe a little under 500 if that were to happen, but it doesn't look like there's a lot there. Even with the last couple of days of action with the tech stocks getting pushed around, that hasn't really changed from that standpoint. So let's take that off. Let's look at, just like we did in the other charts, let's go extreme, and let's look at the long-term charts or the monthly charts on Apple. And I think this is fairly reviewing, and this is the nice thing about looking at the different levels of charts. When we're seeing this thing, we're seeing it kind of a roll over, but once again, we have a moving average, the 10-month moving average rising at 2.49 per month. That is a very robust trend on a longer term basis, and that average right now, let me get that value for you, is 514, and we're trading at 521. So it's remaining above that average. It's probably going to, and all it's going to take to move this market higher and break out of this zone and probably trigger a buy on VPM would be a move above looks like 550, 45 to 550 range would probably be enough to start to trigger the intermediate charts back into a new trend. And what that might mean is that we may pay up to get back into Apple, but it will be a new trend. And what VPM's always trying to do is to capture at 60% of the range. So if you look here where we purchased this, this is the long-term chart here, 180, bought at 189, and then that trend broke down on a monthly basis at 459. So theoretically, you could have owned Apple for a few hundred points, even though it spiked to 700. If you look at the range there, we probably captured about that. The goal of VPM to capture in a trend is somewhere between 60 and 80%. Depends on the efficiency of how these markets unfold. So when we go back and look at the intermediate charts here, we're going to see that. Let's see if we can go back a little bit on this. You can see that we were in and out of the stock a couple times, but in the end, I did a calculation the other day. I think it was around 66%, 68% on trend capture, even though there were, during that same period of time, where from the 189 to the 459 basis the long-term chart, we were able to capture a good portion of that price movement. And you know, most folks that look at stocks are always, you know, you can always see where you should have bought and when you should have sold. What you have to look at is what your strategies do and how much you were able to accumulate during those moves. And while there were only a couple negative trades during that run, they were not negative by much because of the general trend. But the trend would fail, VPM would get out, and VPM's always thinking about risk. When the market's starting to roll over, it's going to always take that protection by getting out. So let's get this down just a little bit more so you can see, and go back to the range. So it's interesting, and this is the weekly chart here, and this is what I wanted to show you here. Is when we purchased this thing way back at 425, and then on a weekly it was able to sell it at 612, and then we were out for this long period. So now we've had the cumulative trades just over the last year and a half have been really good on this stock. So those of you, it's obviously heavily followed in our system, and this has been adding a lot of value to your portfolios depending on how many stocks you have in and what your allocations have been to this particular item. So that continues to be a good stock. Like I said, the trends are neutral right now, looking for a reason to rebuy it. Maybe it declines back down and there's another cycle that it has to go through. Typically, there's a 3 to 6 month period on this particular stocks before you get back in. You can look at some of these previous trades over here where the market get out. In this case, there was only about a 6-week period before it bought back and made that nice trade from 450 to 612. What was that number? It was 425 to 612. And then now, after that decline, you can see we were out for several months. We were out from October roughly to April, in the trade again, probably around 170 days or so, market days. And now we've been out of the trade again for multiple weeks. We're looking at better part of about a month and a half, almost 2 months now. And that's pretty typical. So the market is getting into a point, this particular stock is getting to a point where it's going to roll down one more level, or it's going to stabilize and make another run at these highs. And looks like 551 is going to be a breakout point for this particular stock. So let's one of the other holdings that is out there from one of the larger holdings, and it's been a good stock, has been J&J. And J&J is number 8 in the VPM system from a standpoint of active stocks in our portfolios. And you can see this has had a pretty good run. It's starting to get a little choppy at these levels, but the realities are, it's been a great stock. And I think this consolidation, this is going to be a harder stock to be involved with here. We do have an open trade right now, and you can see we're having the same sort of pattern. Let me zoom in on this so you can see this. The same sort of pattern that was on the indexes. Let me see if we managed to make a new high or not. The high on this was 99.38, and 99.36. Interesting. So we have basically a double top here. We don't have an outside bar working on a weekly bar on J&J, but you can see momentum is positive down here at the PPMs on the short term. The middle, the intermediate, and longer term are pretty flat or losing momentum. So this stock is getting a little tired. It will have to consolidate here. Most likely what you'll see is it move back toward this 10-week moving average. Currently 94.11 is the 10-week. Stock's trading at 96.97, and this stock is going to be stable up here and probably not going to do a lot on the upside, even though we have a long position at the moment. The longer term, looking at what the long-term trends are doing, you can see this has just been a very, very robust chart, a company to be involved in. And the interesting thing on the platform that we're currently looking at is on TradeStation. This is this has the ability to run our models on any increment of time, even down to a 1 minute chart. So it's not as locked down as VPM is on the weekly and daily. So you can go through different increments. You can go out to monthly. You can see this is from a long-term viewpoint. You've got the trying to find the purchase price here at $65 back in June of 2011, where it bought this stock originally, and it's still long on this stock. So it's up substantial numbers. When you look at this trend now, when we look at this long-term trend, I think there's some pretty interesting situation to look at here. I'm just going to capture and show you a couple things over here as the market's getting at this top. We're seeing what would be referred to, and from an Elliott wave viewpoint, is an ABC X ABC type corrective pattern. So it suggests that there's possibly one more high. It could be that the last three bars that you see on this screen are the final run or the fifth wave. Like I said, this is a long-term chart. You're looking at all the way back to '09 on this graph right now, where I've got zoomed in. But it's literally starting to show signs of topping. So this particular chart is not likely to, like I said, I don't see a lot more upside on this particular chart. I'm going to do one last thing. I turned off a couple of the techniques here. I want to go in and I want to put the calculations for the patterns to calculate, and I'm going to do one more thing here so I can show you. There right now is a I'll pull this down. There's a couple key numbers here in this pattern that are unfolding. You're looking at right over here at the top of this pattern. You can see there's some numbers that are there, and they're suggesting that this market is going to continue higher to a little bit, maybe a little bit over 100, but all of the target zones are starting to tighten up, which is usually a sign that the market's about to complete itself. Let's do one more situation here, and I think this will complete there, and then we'll do a summary of what's going on here. So we're back to looking at J&J, and you can see this. Like I said, this is a monthly graph. This stock was stable for forever in a range, and this last trend has been just a huge explosion. So let's go ahead. The next number 9 on the list right now of stocks held is what we call on the trading floor, helps if I get the right symbol in here, is Microsoft, or we call it Softy. Bear with me one second here. I want to go back to the intermediate charts first. And this stock has been doing a lot better. They've got CEO change, other things going on in the company. But this stock, while we still have a long position on a weekly basis, it's flattened out. We're seeing the PPM starting to roll over a little bit. We're still positive, and that value is 38.58. Stock trading 39.44. So we're just above above the moving average on a weekly basis on a 10-week, which showing a pretty positive tone. The PPM2 is currently up slightly at 0.20, and we're up 0.37 on the 40-week moving average. So there is a pretty solid, anything over 0.25 on these indicators suggests that there is a really solid trend here. I don't see this thing breaking down. The trend is good. We're probably consolidating here just along the lines with market sentiment. We're seeing maybe there's some news that come out that can trigger this, but overall this trend is still pretty good. Let's take a look at the longer term. Let's go over and look at a monthly graph here. And you can see for years, and going all the way back to the days when they did that giant dividend that they put out, this stock has been pretty much flatlined forever. And we're finally seeing it move out of this range up in the upper end of the range. The target zones for this particular move right now are on a longer term basis is a $45 to $47 price. So there's another 15% potential on this stock on this particular move up. So maybe 10 to 18% is going to be where we're going to end up on this one. It's really, really hard to tell from at this time, but until the intermediate charts, going back over to the intermediate and the weekly here, these charts are positive. There's a good solid tone, and this we'll go down one more level just for a minute. Let's go down to the daily graph, and you can see the daily, we've actually exited on daily. So you have a short-term daily neutral to negative. You actually have the 10-period moving average going down. The 21 and 40 are flat, and this is pretty typical in this type of zone. And you're just trading along the lines of support. And as I said, on the 10-week moving average is probably the driving force on this trend right now, as far as being a point for the market to hold. And one of the theories behind the price pressure momentums that are in VPM, and you see here at the indicators on the bottom, is they are measuring the pressure of the upward or downward pressure of the markets through the moving averages. And this is fairly unique because most people will look at the actual day-to-day momentum, and what we're looking at is actually the internal momentum, and the PPMs have the primary, the percent change of the moving average tells the angle of attack, which tells what the probability is for the market to stay above it at a point. Let's go back to the intermediate chart. At a point, I think it was 0.42 on a 10-week moving average. There's only about a 30% probability that the market will drop below that value in that average. And these are good trading points. When you see, and you go into VPM and you look at some of the support zones, and you see that, and you can look at the PPMs on an individual stock. And if you're looking to add, or you have a new customer coming in, these are really good points to look at adding to the stock. So right now, adding to Microsoft at these levels would be probably pretty good. So, and like I said, when we start the other show and we start going through the managing of portfolios and doing all the elements that we have to make sure that you're doing the right things at different points in time, because every customer starts at a different point. There's all types of potential thought processes that you can go through to make decisions around individual trades and those type of things, and staying within the context of what BPM's saying within the trend and those things. We wrote several white papers a couple years ago about, I think I wrote one called Buy Low, Sell High. One was, and it was really about understanding what the configurations are, and there's enough information there on VPM, and we're hoping that as we start these other shows that we're going to get some of that going and give you the ability to do that. Going to go through. We're going to go back and just look at how the market's evolving to finish as we're coming close to finishing the day. And we can see we're back down 769. We've got several hours to go yet, but like I said, the key number on the close today is going to be, let's see here, 1826.85. So if we can get a close under 1826.85, we're going to see this market remain under pressure early next week. If we close above it, it's kind of neutral. It really doesn't mean we're going to rally or there's any kind of bullish tone or anything. It's really about what the configuration, how it's going to unfold as it moves forward over the next couple days. And early in the week, and actually after I see the close today, it'll be helpful in determining the patterns that unfolded on everything that I've been showing you on the show is going down from the monthly, weekly, and daily. And in the case of this chart, I'll show you something here that I think will be helpful also. You can see this. This is Microsoft. Let me get the index back up, put S&P index. But we can go right down and take a look at this chart. And what's coming up for you right now, this is the hourly chart. Just like the same patterns I've been trying to get you folks to realize what the concepts are that I am actually using to determine these trends. They happen on this basis. You can see the hourly chart right now, all three averages are down. See if I can get the cursor on here. All three averages are down, and you're seeing the 10 period moving average. This is a 60-minute graph, but 10-minute is actually accelerating. That's going to be resistance for the market getting above that. And that average is dropping. Let's just see what it's dropping at here. It's dropping at per hour right now about 1.5 points. So it's at 1840 right now. It's going to be 1839 next hour. So we're going to have a lot of resistance above this market to even have a chance of getting positive. It's possible we get short covering at the end of the day, but it doesn't look like it at the moment. Let's go down one more level here and just take a look at how. Let's go down to a 5-minute graph here, and you'll see that on a 5-minute graph we're starting to just kind of trade in a sideways pattern. Let me blow this up a little bit so we can see a little different pattern here. So you can see we're looking at, for the most part, from that first bar down, this is what today looks like on a short-term basis. So this is a 5-minute graph, and you're just seeing the market trade in the projected ranges. You can see we went up to this middle range where this yellow is here, and we traded back down, and now we're just below all three averages. None of the averages are down very much. They're pretty much flat. Not suggesting that the market's going to accelerate one way or the other. So the next probably 20-30 minutes as we move into the latter part of this closing of this week, we'll start to see some things move out of there. So as we finish this broadcast, I just want to summarize once again. This will be available probably within the next 15 minutes to watch. It's recorded. You'll be able to see it on our Ustream channel as well. It will be on the YouTube channel probably in a couple hours. That takes a little more time, maybe a half hour to 45 minutes. We have to download and then upload this. But I really appreciate everybody taking the time to watch these. Please keep giving us. We've gotten some good feedback from you, and we're going to continue to develop this show. We'll get beyond some of the little glitches here with our new studio, but everything seemed to have worked really good. And we really appreciate everything that you guys are continuing to do for us. And I'm hoping that we can continue to grow the show and get you some quality information as we start some of these other segments. I want to thank you for coming today. We'll talk to you sometime next week. Thank you.